So welcome to the lecture of the evening. Tonight, we're going to be discussing candlesticks, and this is going to be the third lecture in our beginner course series at the end of 2022. So hopefully those of you who are attending have either seen the previous two lectures or feel confident in your knowledge regarding the basics of options. So if not, that's okay. We won't need too much of that knowledge for these specific lectures, but if you haven't seen those two lectures, I highly encourage you to go back and take a look at those. But with that being said, just to recap on the future courses for the next couple weeks that are coming, tonight we're going to be going through candlesticks. So we're going to talk about candlestick patterns, just price action in general. And I'm going to give a lot of focus to kind of the deeper meaning behind price action, but we'll talk a little bit of that in more detail in just a few slides. So next week, we're going to talk about indicators. Week after that, patterns, support, resistance, and trends. Or actually, no, this isn't true right now. I think next week we're actually talking about support and resistance. I switched this up. So don't pay attention to this too much, actually. I changed the order with this new class. But ultimately, the most important part is the goal of this class is to create successful traders who could find the highest probability trades and act on those opportunities with confidence. And as we continue through the content through these lectures, I truly believe and know from the past iterations of this course series that this is 100% a realistic goal. And I know that everybody who will dedicate themselves to this class, to practicing the things that they learn in this class, can absolutely make a gigantic leap in their trading knowledge as well as actual results. So with that being said, let's talk about a few things that I want to just mention before we get started. As I always mention at the beginning of the classes, there's a lot of information in each and every one of my classes. So please bear with me as we kind of divulge all that info. I do my best to cram as much information in a short amount of time to make your time as useful as possible. So with that being said, there's going to be a lot. What I try and do in all these lectures is start with more basic information and then build on top of that. Candlesticks, it's not exactly the case, but in general, that's going to be kind of the theme and the layout of our classes. And one thing that I want to point out is when we're looking at charts, there is no end all be all that is always correct. And what I mean by that is you can't just look at a candlestick pattern and say, okay, this stock is 100% going to go up because of this, and make your decision based on that. That's not a good way to go about trading at all. You have to look for multiple confluences. And you have to remember, if institutions were only trading candlestick patterns, they wouldn't make sense, right? Because if they saw a candlestick pattern, they would obviously always be on the right side of the trade. So you can't simply just look at candlestick patterns and make trades. But this is just one building block to the bigger puzzle, which we are going to begin and continue to develop as of tonight. So big picture, this is just the first kind of key to understanding charts, is understanding what the candlesticks mean. And really that's more important in my opinion than the actual patterns. So we will be discussing some of the actual candlestick patterns tonight, but really the main focus and the main goal for this lecture is for you to understand what candlesticks are telling you and how to make meaning out of the candlesticks you're seeing on these charts. So big picture, always there's going to be flaws, like I've been mentioning, right? And I can't emphasize this enough. There's no 100% successful trading strategy in the market. And if you think that there is, or if somebody tells you that there is, they're not being truthful. So I just want to continue to hammer that point home, that this is simply just a part of a bigger wealth of knowledge that you should be applying to each and every one of your trades. So with that being said, let's start to talk about some basics and just understanding what these candlesticks actually are and what they mean. So essentially, candlesticks represent historical and present price movements. What I mean by that is we can look back on a chart with this candlestick format, and we can see how price has moved in the past. And this was a chart from back in February. So we can see, this is a nice one because you can see kind of the whole history of the bull run in 2021, right? You can see how prices moved in the past, and you can use this past information to make determinations on where buyers might be present in the future or where sellers might be present in the future, which is obviously important because buyers and sellers are what truly move stock price. So just giving some meaning behind why we might care about the historical price action. And I also say that it represents current price movements because candlesticks move in real time. If we take a look at a chart really quick of futures, which trade overnight, if you aren't familiar, we can take a look at maybe something like the 1 minute chart, and we can see how it's moving in real time. Obviously, this isn't something that is going to be incredibly useful looking at the 1 minute chart at 9 p.m. Eastern for most people. And it's funny because it's actually not moving right now. It's completely flat on this tick. But these candlesticks will move in real time. We can check back later on this and we can see how it's moved. So I'll just set this green circle and we can come back and refer to this chart in just a few minutes and see how it's moved so we don't sit around watching it. So again, these bars, red and blue in this case, are the candlesticks. And again, there's different time frames where you can view these candlestick charts. Somebody asked a question about this earlier if we're going to be discussing this, and this is something that's absolutely significant when viewing these candle charts. So in this specific example, each candlestick represents one day. If we refer back to the chart that I currently have pulled up, this candlestick chart, each candlestick represents 1 minute. And you can see actually how price is now moving in real time. You can see how the wicks are moving. So there you go. You can see it kind of moving live for us. But each candlestick chart has some different use cases. But for the most part, the larger time frames are more significant. Can anybody make any guesses or have any reasons why I might say that candlesticks on the daily, the weekly, or the monthly chart are more significant than candlesticks on the 1 minute chart? Does anybody have any guesses as to why that might be the case? More data. I love that answer. Yeah. Anybody else have any other answers? Yeah. Better representation of the market as a whole. Sure. Big picture trend. Yeah. All excellent answers. Yeah. 100% agree with all those answers. So the way I like to think about candlesticks is think about candlesticks as an individual piece of data, right? When we look at these candlesticks, they're telling us something about a specific time period in a stock. It's like going back in a time machine, right? And when we're looking at the weekly chart, we can look back at any week and see what happened throughout that week. So for example, on this week of mid-October in 2021, we can see that NVIDIA found a significant amount of buyers after breaking this key level, right? But for example, this weekly candle featured a significant amount of volume, right? And we're not going to get too far into volume today. I believe we discussed it a little bit yesterday, so you should have kind of a basic understanding. Just to recap, volume essentially represents the amount of shares traded in a specific period of time, or the amount of anything traded in a specific period of time. So in this case, NVIDIA has a significant amount of volume on all these weekly candles, and you'll see that all weekly charts will have a much larger amount of volume compared to the lower time frames. And this essentially confirms the fact that there's more data on these weekly charts or these longer term charts. More pieces of trade or more trading time is encompassed within these larger candles. So the moves that happen within the weekly candle are much more significant, or the levels that we see are more significant on the weekly, or even if you take it another level down, the candlestick patterns and formations that we see on these weekly timeframes are much more significant than that of the 1 minute, right? Because as so many people mentioned, it's a lot more data, right? Or it shows a better picture of the actual trend. For example, if we see some kind of reversal candle, which we'll learn more about in a little bit, on the 1 minute, it's much less significant compared to a reversal candle on the weekly chart or the monthly chart, right? So the monthly, weekly, daily, all those longer term charts just consist of more data, right? There's more trading volume encompassed within that time frame, so we can make stronger, if you want to call it predictions, or build a stronger trade plan based off of those charts. Does that kind of make sense to everybody and understand why those longer term charts are more significant and why what we're seeing on these weekly charts or the daily charts are more significant relative to something like the 5 minute? And again, just to recap, the weekly charts or longer term charts also give you a bigger picture of trend, which we haven't necessarily learned about trend in too much detail, but it is important to note that as we continue to kind of develop that idea. So any questions on that, or is that making sense to everybody so far? Just wanted to kind of introduce the significance of that, especially because we had a question on that. We got a thumbs up. Everybody else doing okay? Or is, yeah, you guys doing all right? Cool. So it seems like you guys are good. So let's keep moving on and talk about the basics of what these candlesticks actually are, right? Because some of us are probably looking at these candlesticks. We see this red and green, some lines, some boxes, and we're like, okay, great. What does this mean, right? So let's break this down a little bit more. And just give me 1 second. So let's take a look at these graphics. So there's two types of candlesticks, right? There's bullish candlesticks where the price increases, or green candlesticks, or whatever you want to call them. And there's red candlesticks or bearish candlesticks, right? And just to kind of introduce those terms, bullish means you either want something to go up or something is going up, right? Or a stock, I should say. And bearish means you want a stock to go down, you think it's going to go down, or it is going down, right? So essentially, if you're bearish, something's going down or you want it to go down. If you're bullish, something's going up or you want it to go up, right? So this green candlestick is going to represent an increase in price. And candlesticks have an opening and closing time frame. So for example, on the 1 minute time frame that we were previously looking at on ES, which is the futures of S&P 500, these 1 minute candlesticks open every 1 minute. So right now it's 6:16 for me. At 6:17, a new 1 minute candle will open and the previous one will close. And subsequently, the minutes after that will continue to kind of follow that same pattern. Same thing on the 5 minute. On the 5 minute chart, every 5 minutes, there's going to be a new candle that forms, right? So that is what is referred to as the opening and closing of a specific candlestick, right? So it opens and closes based on the time frame you're looking at. If again, you're looking at the daily candlestick or the weekly candlestick, excuse me, the weekly candlestick opens at market open on Monday morning and it closes at market close on Friday night. That's how a weekly candlestick works. So that's just what the open and close are. And the high and low should be a little bit self-explanatory. Essentially, the high is the highest price that the candlestick reached during that time frame. And the low price is the lowest price that the stock reached during that time frame. And the candlestick is the instrument that represents that, or the graphical representation of price. So you'll notice that on the bullish candlestick, or the green one, the close is higher than the open. And this should make sense because the price increased throughout that time frame, whereas the bearish candlestick, or the red candlestick, has a close lower than the open price, meaning that price decreased during that time frame. And just to look at kind of a reference for that, if we take a look, we'll just take a look at the ES daily chart just because we already have it up. For example, if we take a look at this big, I have my candlesticks as blue, but this is the same thing as the green for me. This big blue candlestick, this candlestick opened right around 37.50 and closed right around 37.80 or 37.80. So the open is down below, the close is up top, right? And it's the exact opposite for these bearish or red candlesticks. So for example, oops, didn't mean to zoom in there. For example, this red candlestick opened here right around 40.80 and closed here right around 4,000, right? Which represents a decrease in price. So that's just kind of the basics of what these candlesticks actually represent. And there's also some terms that are generally used to describe the different parts of the candlestick. And these are the body and the wick. So the body is this kind of rectangle shape, and the wick is these string shapes that kind of look like a candlestick wick, like a real candle. And these are two kind of terms that we'll hear commonly used by traders, and especially we'll refer to them in this lecture as well. So before I move on, is this all making sense so far? Because I'm about to kick up the heat, and I'm going to talk a little bit more about the deeper meaning of candlesticks and what you should really be understanding when looking at them. Anybody have any questions? If you don't, forever hold your peace. Just kidding. But any questions before we turn it up a little bit? You have a question, but not for this. Cool. Well, if you have a question, but not for this, you can feel free to put it in the chat and I will get to it as soon as possible. So now I want to talk a little bit about the deeper meaning of candlesticks. A lot of places will refer to you to maybe study all the patterns, which can be important. In my opinion, this is what is most important, is not the actual patterns, but the story that candlesticks are telling. This is something that is truly important to me, and this is something that I'm going to continue to bring up throughout this lecture. And this is something that I apply very frequently in my trading on a day-to-day basis, compared to actually, looking at the candlestick patterns that we're going to talk about later today. So understanding what these candlesticks truly mean and the story that they're telling is what is truly important when looking at candlesticks. Not memorizing all the patterns, but understanding what the patterns mean and what you should be thinking when you see that type of price action. So this graphic I like a lot because it makes it pretty simple. So you can see, let's just focus on the bullish candlesticks for now. On the left, it starts with the strongest type of candlesticks, and on the right, it kind of transitions to the weakest type of bullish candlesticks. Before I explain my reasoning why this one looks stronger than this candlestick, does anybody have any guesses? I'm not expecting you guys all to know. I'm sure there's some people that are familiar with this concept, but does anybody know why this candlestick on the left is so much stronger than this candlestick on the right? How about some guesses? If you don't know, feel free to drop a guess. Salem says, first one, buyers bought all the way up and stayed there. Sure, I agree. The left buyers weren't, or I'm sure you mean the right buyers weren't able to hold. Yeah. Last one is getting sold. I agree. More volume and price movement. I can't necessarily agree with more volume because we're not certain on seeing the volume, but More price movement, yes. Yeah, higher close price, yep, I agree. The body is bigger, yep, I agree. More buyers and less sellers, yep, price is more decisive. That's an excellent term. That's an excellent term. So the analogy I like to provide to kind of the individuals who maybe it isn't clicking instantly, which is completely fine, is I like to think of each individual candlestick as a tug of war between buyers and sellers, right? Sellers want to see the price go down and buyers want to see the price go up. Because if you think about it, if you buy a stock, you want the price to go up. And if you sell a stock, you want the price to go down because you're selling it because you think it's going to go down, right? Whether you're shorting or selling it. So that's the kind of disconnect between buyers and sellers. Buyers want the price to go up, sellers want the price to go down. If we look at this specific candlestick right here, comparing the open price to the close price, in no situation was there a point where sellers controlled this candlestick, right? Obviously, between the open and close, anything can happen, right? This candlestick on the left could have looked like this candlestick on the right at one point. The important thing to note is you can only determine sentiment and determine strength of buyers and sellers from a closed candlestick. There's ways to determine the strength of buyers and sellers in between candlestick opening and closing with volume or maybe the level twos, but ultimately you can only look at closed candlesticks and say that was a strong candle for the bulls or that was a weak candle for the bulls, right? So as you can see, as we trend towards weaker type of candlesticks, you're starting to see more wicks, right? And essentially these wicks show that there were sellers present during the duration of this candlestick. And let's look at some of these candlesticks in the real world. So for example, if we look at this candlestick right here, this looks like one of our more bullish candlesticks, right? There's little to no wick anywhere on this candle, maybe a tiny one at the bottom, but this is an incredibly bullish candlestick. And if we look at maybe a weaker green candlestick, it might be something like this, where we have a strong upside wick, also a large downside wick, and not a very significant increase in price. So this is kind of the, I guess, dichotomy between a strong and weak candlestick, right? You're looking to see this kind of transition between that tug of war and between the balance of buyers and sellers, right? Because ultimately, when we're trading, we want to be on the right side of the trade, right? And to do that, we need to know who's in control. And when we see candlesticks such as the ones on the left, it indicates that bulls are in full control of the stock price, right? It's very evident that they're very strong, right? There's no indication that they have any sort of weakness, right? They're holding the candles, they're closing the candles right at their high, which means they pushed the price up and held it there or continue to push the price up throughout the duration of the candle, meaning that they were continually willing to buy. They were not slowing down their pace on buying. And ultimately, right, all of this analysis boils down to understanding what the buyers and sellers are doing. That's as simple as it gets, right? All you're looking to understand when you look at these candles is understanding what the buyers and sellers determined was direction, right? Because every single candlestick you can think of as a battle, right? It's a little battle, and ultimately the battle is won when trend is established, right? So for example, let's take a look today, right? Let's take a look at some candlesticks during today's moves on SPY. So for those of you who saw my watch list for the week, you probably noticed that I said that I was bearish below this zone, which for better or for worse, we broke above this zone and had an amazing rip today. Unfortunately, I missed out on this rip, but I want to just introduce what these candlesticks actually look like, right? So you can see how this was beginning to look, right? So we began to move into this zone, move into this significant area of resistance. And as we move higher, you can see the weakening of bulls, right? So you can see that these candlesticks were getting weaker and weaker and weaker. And at one point, these candlesticks were near these lows, right? They had retraced significantly lower, all the way down to 395 when opening right around this 396 area. And this is the 1 hour time frame. But eventually, right, all of a sudden, we get an increase in volume towards the end of the day, and we get a nice candle breaking the upside, which breaks all these previous highs in 1 hourly candle, right? So it takes out this previous range that we spent 2 hours trading in. So we get one candle clearing the whole thing on increasing volume with an incredibly bullish candle. When I look at this, this means to me that something has changed, right? Because when you look at this price action, and let's say you don't see this candle, right? And I know that might be a little bit hard for everybody to see, but let's just say, just ignore this candle. if I look at this price action, I see bulls weakening, right? It's very easy to see that. We can see less buyers, the bodies are decreasing in size, volume is decreasing on the way up, we're getting longer wicks to the downside, right? It looks essentially like a textbook version of this. And you have to remember, the market is a battle of buyers and sellers. So when we're seeing this weakening of bulls, sellers have to want to try and take over, right? Because they know they're at a critical level of resistance. But when you see them unable to take over after this weakening in bullish price action, and you see this strong bullish candle on increased volume to the upside, you have to be thinking, okay, something has changed here. Whether you decide to go short or excuse me, whether you decide to go long or close your short positions, you should be looking at this chart and saying something significant has changed here, right? The tug of war between buyers and sellers, the balance has tipped, something has now changed, right? So these are the thoughts that are going through my head when I'm trading. For example, we can see a similar type of action in Friday's price, where we saw this really bullish candle off of support, and all of a sudden we got a little bit of a weaker candle, right? So these are just the types of things that you can be looking at when analyzing charts. You can see how it applies in real time. I mean, there's thousands of examples of this, but again, it's important for me to note that anybody can go back and look at a chart and say, oh, look how bullish this candle was. You could have went long right here, right? Again, anybody can do that, right? I can go look back at any chart and tell you the perfect time and buy and sell. There's nothing impressive about that. The important part is studying the previous price action and understanding the moves that followed significant candle patterns like this, or not even patterns, but just price action such as this. When we see this weakening price action and all of a sudden buyers show up seemingly out of thin air, that is something to take notice of. Whether you decide to close your short positions, whether you decide to stop thinking about going short when you see this weakening price action, whatever it might be, right? It's important to begin to evaluate what is actually happening when you see these significant changes, right? So that's kind of the big picture of what I wanted to get across today. If you leave this lecture right now and you understand these concepts, I'll be more than satisfied and more than confident that you will understand all of the patterns later. So I'm going to stop and answer some questions here. Let's see. So you're asking about SMCI. We can take a little bit deeper dive in that later. You blew your first port because you didn't wait for the candle to close. Yeah, that will definitely cause some problems. Again, you have to wait for candles to close. If you think about it, right, at one point, and I'll just illustrate it for you, notice how the low of this candle is way down here. I'm just going to illustrate it for you so you can see this. At one point, this candlestick looked something like this, and I'll show you. At one point, this candlestick looked a little bit like, let's see if I can get this done. At one point, this candlestick looked like this, which to me looks like a pretty nice rejection off of this resistance level. But it's so important to note that this candle did not close here, right? And if you were looking in the middle of this candle and you decided to go short after seeing this rejection, not trading this key level, but waiting for this rejection to develop, but not waiting for the candle to close, you would have gotten wrecked, right? Because if we remove that alteration that I did, the candle did not close anything looking like that. So hopefully that visualization helps you see that these candles look completely different when they're actually moving. We saw it very briefly when we were looking at ES on the 1 minute. And obviously, again, the 1 minute isn't significant. We're purely looking at this for visuals. But if I leave this up while I continue to answer questions, you guys can watch these candles change in real time. Like, for example, this candle just dropped red right there. And let's see how it continues to change. So hopefully that illustrates how different candles can look when they're open. So there's two ways that I trade open candles. And I'm going to let you guys know. The two ways that I trade candlesticks that have not closed yet are if price has come up to a key level where I'm anticipating a rejection for whatever reason, right? I have done some due diligence into that specific level and I have multiple reasons to believe that it should act as a strong level, I will go short directly at that level. So for example, if I strongly believe that we're going to reject this 397.3 level, I would go short right at this level, whether the candle was open or closed. The second way I trade open candles is I don't trade open candles, right? So either I go short directly at my trigger levels or go long directly at my trigger levels, right? Either it's the support or resistance and then I wait for the candle to close, see if it closed how I would want it to, or I wait for the candles to close and then begin to develop a sentiment following that. So typically I try and enter closer to the support levels, and that sometimes leads me to enter on some unclosed candles, but an unclosed candle is never my reason for entering. I'm never looking at a candle that's in motion and saying, okay, this is starting to look like a hammer or whatever, I'm going to enter because it's looking like it's going to close this way. That is never the case. If I'm ever entering on an unclosed candle, it's always because of reasons outside of that specific candle. Whether it's I'm entering in a strong support with trend support and a moving average trending in my direction, and maybe some flow supporting and level 2 supporting, right? I'm never entering on a candle because it looks how I would want it to, but it's not closed yet. So very important to note that, and that is something that I cannot emphasize enough. So that being said, okay, it looks like you guys enjoyed that visual, so hopefully that made sense to everybody. But yeah, again, so important to realize that these candlesticks totally will look different on you. So you cannot make decisions based on unclosed candlesticks alone. You just can't. There's no logic behind that. And again, I'll leave this ES chart for another minute. Maybe we'll see something change, but it doesn't seem like it's incredibly exciting for us right now. It seems to be pretty boring at this hour. So unfortunately, this drop that we got right here was the most excitement that we got. But is there any questions on this concept so far? Yeah, iPhone, I'll check SMCI a little bit later when we work through some more content, just because I can already tell we're going to be tight on time. So yeah, you can see how this candle is already moving. So for example, if I was looking to go long because of this long downside wick, it wouldn't be valid until the candle is closed. And now the candle is closed, so I could say, okay, maybe there's some buyers around this area. But it's also important to note that this is the 1 minute chart. So this pretty much means nothing to me. The only reason I'm showing it is because it's moving a lot easier to see. So that's why I'm looking at the 1 minute. But yeah, hopefully that just kind of gives you a little bit more insight into what candles look like when they're moving. So with that being said, let's start to talk about some patterns. And these patterns are all going to be derived essentially from this type of thinking, right? So remember, the bulls, for a nice bullish candle, we want to see price close at the highs with minimal wicks, right? The lower we see the candle close and the more wicks we see, the less bullish it is, right? So keep that general concept in mind, and keep the same thing in mind for bearish candles, except the opposite, right? In general, for a strong bearish candle, we want to see it close below the lows with minimal wicks, something like these 2 or potentially 3 candles. But as we start to see the candle not close as close to the lows, and we start to see these bottom wicks, that indicates that buyers are present. So keep that in mind as we continue throughout these patterns, and that should make it a lot more evident as to why these patterns are bearish or bullish or vice versa, right? So let's start to talk about some reversal candles. And some of you might be wondering, well, what is a reversal? Essentially, a reversal candle describes candles that are likely to reverse the trend of a stock. Important to note that reversal candles are in no way, in any type of candlestick pattern, are in no way a surefire way to determine the trend of a stock. Again, I cannot emphasize this enough. This is strictly a piece to a larger puzzle. You can't just go and trade only on candlestick patterns. If it was that easy, anybody would do it. Institutions would be doing it all day, all night. And it's unfortunately, that's not the way it works. In order to truly be successful in trading, you need to have multiple reasons and multiple probabilities working in your favor and a deep understanding of price action. So that's what we're going to continue to build. But I do believe that these candlesticks help to apply some meaning to what the price action means, and they can be some useful patterns to refer to when determining strength of a trend or strength of a specific stock. So let's start talking about some simpler patterns. So this first pattern that we're looking at here is called an engulfing candlestick. Essentially, you'll be looking for an engulfing candlestick at the top and bottom of a trend. And notice how I mentioned a time where you should be looking for these candlesticks. Context is so important when analyzing charts. You can never just look at a chart, identify a candle without seeing any of the context and saying, okay, this looks good. You always have to be looking at the context. You need to be looking at the trend. You need to be looking at the prior candles, right? You cannot just look at one candle and make a decision based off of that. You should be looking at many candles, many time frames to understand the context of the stock, understanding how it's been moving in the past, respective to your levels, and then finally looking at maybe a reversal candle or some kind of candle indicator to start building a thesis. So again, you're looking for an engulfing candle to occur at the top and bottom of a trend, right? So that is your context when looking for these reversal candles for the most part, is finding these trends at the top, or finding these candles at the tops and bottoms of trends. And hopefully you can kind of see what these engulfing candles are meant to do. There's been a few ways that I've used analogies to help them stick. Some people like to call it like the father and son candle, where the dad is the engulfing candle and the sun is the candle that gets engulfed. I mean, it's pretty silly, but it works for some people. So essentially what you're looking for on these engulfing candles is you're looking for the engulfing candle to fully engulf the prior candle. So you can see that the opening and closing of the previous candle of the engulfing candle fully engulfs the whole range of the previous candle. So again, just to remind you, bullish is when we're looking for price to go up, and bearish is when we're looking for price to go down. And these are some terms that we're going to continue to use. But since this is the first pattern that we're talking about, are you guys understanding this? Does this kind of make sense? I'm going to show you an example of what this looks like in the market, but does this make sense as to why this would be a bullish or bearish pattern, right? If you think about it, this candlestick alone would be pretty bullish or bearish, right? Remember that we see a candle closing near its lows, minimal wicks. That's a bearish candle, right? And the opposite for the bullish candle, we see a candle with minimal wicks closing near its highs. So those candles alone are bullish. And when we see these bullish candles appear after a tight range, you can see that kind of trend weakening, right? So that was the concept that we discussed earlier, is we see selling begin to weaken with this final candle with a tiny range, right? And then finally, we see a big slap of buyers coming in, and that's when we would expect the trend to reverse. Yeah, you think of Pac-Man, remember this because it eats the previous candles. That's actually a good one. Somebody else said a good one. Yeah, basically getting eaten. Yeah, I like that. That's actually a pretty good one. That might be better than my analogy. I like that. So let's take a quick look at an example. So this is a little bit of an older example, but it's important to note how the previous candle is fully engulfed by the following candle, right? So you can see how once the price breaks out of this engulfing range, a nice uptrend ensues. So you can see this kind of minor downtrend. Then we see this engulfing candle, and then that's when we would anticipate the breakout. So again, just to highlight, it's right there. This engulfing candle isn't exactly textbook. You're not always going to see these type of candlesticks patterns play out perfectly, right? If the market was that easy, it would be great for everybody, but so many people mention that it's much more of an art than a science. If you're looking for price to come exactly to your levels to the tick, or your candles to appear exactly as they do in the textbook or in this lecture, unfortunately, it's not always going to happen. And an important piece of advice that I think I could pass on to you all is, if we're always waiting for the perfect setup, usually that perfect setup will never come. There's very good setups in the market, but perfect setups, even so, are still likely never going to come. So there's going to be aspects of every trade that we take that aren't 100% perfect. And that's just the reality of the market, right? You can't ever have a trade that's 100% going to work in your favor. And that just goes to show that there's no such thing as a perfect setup. There's very good setups and very close to perfect setups in somebody's idea, but you always have to remember that there's nothing that's going to look exactly as you might expect it to always, right? So keep that in mind. But again, right, once we see that engulfing candle, we break out of that engulfing range and we get that nice uptrend higher. Yeah, if that explanation for you works, Wealth Guy, then that sounds good to me. Yeah, so you're viewing this as the market decided to change right there, not helpful, but self-explanatory for you. And yeah, I can explain this gap. Essentially, when I took this screenshot, I had after hours turned off. So this gap right here is a move that happened overnight. So as we were taking a look at futures, oh, wow, futures moved a lot. So this futures chart is moving right now overnight. So the stock market moves even when it's closed. And this is exactly what we're seeing right now. This is this overnight movement in progress. So those gaps form during overnight moves. So for example, this AMD stock, for whatever reason, gapped up multiple dollars in the next morning. It could be due to news. It could be to overall market trends, whatever it might be, right? But stocks move overnight. And during afterwards. And it's nice to see how volatile this candle is moving. This is pretty cool. Hopefully it's nice to see this example live during lecture at 6 p.m. And this is a good question. In which time frame this engulfing works? It's important to note that engulfing candlesticks and all candlestick patterns are valid on each and every time frame. But again, as we discussed at the beginning of the lecture, anything that happens on the larger time frames is more important than things that happen on the lower time frames. So that's always going to be the case. So let's talk a little bit about some few more patterns. So these are going to be the hammer and the hanging man pattern. And again, right, this should be exactly what you're looking for, right? If we remember our graph that we were looking at previously, this is a great example of a weakening buy candle, right? Or I guess a beginning to strengthen sell candle. Or this is a great example of a strong buy candle, right? We got a candle closing near its highs, a long downside wick. So remember, at one point, this candlestick was way down at this wick. This was looking like a very bearish candlestick. And all of a sudden, bears or bulls took over, closed the candlestick at its high, right? So this is a hammer pattern. The hammer and the hanging man, it's important to note that they look the exact same. The only thing different is the context, right? So for a hammer to form, you want to see that downtrend first. And for a hanging man to form, you want to see that uptrend first, right? So these candlesticks look exactly the same. It's also important to note, again, right, trend is very important. You have to be looking at the trend when determining if a candlestick pattern has occurred or not, right? You're not going to see a hammer in the middle of a trend. You're not going to see a hanging man in the middle of the trend. It's got to be at the bottom of a trend to be valid. Yes, reversal candlesticks must be at the tops and bottoms of trends to be valid. And again, right, as we've been discussing all night, this long downside wick indicates the presence of the opposite side of the trade. For example, this hammer pattern indicates the presence of buyers. This hanging man pattern indicates that sellers were present, but still weren't able to close the candle with incredible strength. And actually, this is an important segue into kind of one reason, why I don't like the hanging man pattern as much. I personally don't view it as strong. I think a hammer is stronger because it shows that at one point sellers brought the price all the way down to this low and buyers overwhelmed them and brought it to a high. Whereas the hanging man pattern shows that sellers brought it to a low, but buyers are still present and brought the candle back up close to its open. So it still shows weakening in buyers, but it's not as strong of a reversal for me as a hammer. And I'll show you what reversal is stronger for me. It's actually called an inverted hammer, or a shooting star actually in this case. So you'll see kind of what I mean by that. But yeah, hopefully that kind of makes sense. Just to show you a quick example, you can see how hammers play out, right? So here we have a hammer rested right at the bottom of this trend and a hanging man sitting near the top of this trend. And important to note that the reversal was noted here with, again, this long downside wick, which indicated the presence of buyers. But it's important to note that we saw a lot more or a lot stronger of an uptrend when we saw the hammer relative to the hanging man. And obviously this is an experimental setup. This isn't necessarily based in science. However, this just is kind of data that I handpicked to show and kind of illustrate my point that I don't think that hanging man candlesticks are as strong of a reversal, because if you remember our discussion on theory in general, right, there's still some buyers present here. Whereas this shows that there were sellers here, but they were a lot weaker than the buyers. But this shows that the buyers are still not really all gone. So that's why I feel like the hanging man is a little bit weaker. So I want to introduce the next two hammer style candlesticks before I break for questions really quick. So next two that I think, well, one of which I think are stronger is the inverted hammer and the shooting star. And you guys can probably guess which one I think is stronger. And I actually want to have the chat let me know which one you guys think is stronger based on the knowledge and the things that we've discussed about so far tonight. Which reversal candle do you think is more significant, the inverted hammer or the shooting star? And I would love if you could provide a reason why. I'm not going to say who's right or wrong yet. Yeah, you guys are looking good. I want to see some more reasons. Let's see some more reasons. Any more reasons? Yeah, so I agree with most of your answers there. I definitely agree that the shooting star is a lot more significant, right? Yeah, sellers continued to push the price down here with this incredibly large upside wick. Remember, the price was trading all the way up here at one point. This was looking like a really bullish candle, but the sellers took over and closed the candle all the way at its low and generated this large upside wick. Whereas this inverted hammer, inverted hammer showed that there was some buyers that brought this candle to its high, but there's still sellers present. So I don't personally follow inverted hammers and hanging men as much because I don't think they're as strong. But it's important for me to introduce these patterns to you all just so you know that they exist. But my favorite hammer style patterns are the hammer like this with a long downside wick, and the shooting star with a long upside wick. These are my favorite patterns to watch for when referring to hammers. And again, as always, trend is so important. The context could not matter more when looking at all types of candlestick patterns. So with that being said, I want to take a quick break and see if there's any questions that I can answer, because the next slide is a quick pop quiz to check your understanding. But so far, it seems like you all are doing very nicely. But is there any questions so far, anything that you're confused about, or something that you might want me to clarify with the topics that we have discussed as of so far? We're getting pretty deep into the lecture. We're about 40 minutes in. Oh, somebody was asking about an order block. It doesn't have significance in the stock market. Yeah, so there's a few definitions for an order block. Yeah, I'll put the candlestick chart up while I talk. There's a few definitions for an order block. There's like the ICT definition, which I'm not 100% familiar with. I think it's just the support zone is pretty much what they're referring to. And there's also like an actual order block on the level 2s, which is where there's actual orders and buyers waiting to be filled at a specific price. So that is very significant because we have to remember that buyers and sellers are what truly moves the market. So if you see a large order block parked on the level 2s, that essentially means that there's buyers waiting to buy at a specific price or sellers waiting to sell at a specific price. So that's significant because that could generate a trend, or at least that could key you into a very significant level. Does that kind of make sense? I know we don't know that much about level 2s at this point in time, so I'm not necessarily expecting you to fully understand what I'm referring to necessarily, but if you want to talk more about that later, we can. How does the start and close of these two make sense with the close of the last candle? I don't exactly know what you're referring to. If you could clarify just a little bit, that might be helpful for me to answer that question a little bit more effectively. What's less risk with trading? SQQQ and QQQ or TQQ? I don't know which one you're asking if there's less risk, but in general, the leverage ETFs, which is going to be SQQQ and TQQQ, will be more risky than QQQ because leverage ETFs it's called beta slippage essentially, and it's a complicated explanation that I'm not even 100% versed on, but essentially the leverage resets every day, so it's not always 3x leverage or 2x leverage or whatever it is. So it resets, so it can cause you to lose more money when the stock is flat or when it's moving opposite what you're expecting in short. So the non-leverage ETFs will always be less risky. Any tricky candlesticks that I think we should know about to be better gauges newbies? Yeah, tricky candlesticks, honestly, one of the trickiest ones that I see is when you see like a shooting star and then a hammer the next candle. That is one that can be really tricky to interpret. And essentially what I see, like, for example, those are two strong and significant reversal candles. So when I see something like that happen, I usually just wait for either the high of the shooting star or the low of the hammer to be broken. And I'll try and illustrate that with these candles I have available to me. So let me try and make a little illustration. So let's say this is a shooting star right here. And let's say that this is a hammer. So let me make this a hammer. Sorry, I gotta make this a little different. Why can I not do this? Why is that not working? Close 4020. Why is that not working? Sorry, I'm trying to figure out how to make this example really quick so you guys can see it. Why cannot be corrected using what? I don't understand. Okay, well, it's not letting me make that, which. Okay, let me try one more because I want to try and get this for you. Let's try this 4025. Okay, this is going to let me do it. And then the close will be. Why does it not work? Oh, I see why. There we go. Okay, so for example, okay, well, that is really aggressive, but hopefully this kind of illustrates the point. So for example, if you see some kind of candle such as this, where you see, okay, I'm totally blowing this example right now. Sorry. Okay, well, regardless, essentially, if you see I guess this is kind of the right example. If you see two reversal candles appearing after each other that don't agree, I usually just wait for the range to be broken. So if this is a hammer and this is a shooting star, which this is not a shooting star, and this is barely a hammer, I would just wait for this range to be broken. So in this case, we would have gone long on this range break to the upside. How do you analyze the different time frames for candlestick patterns? I usually start from the highest time frame and zoom in. So I start on the weekly time frame or the monthly time frame and begin to zoom into the lower time frames. Zoom user, that's an interesting question. The opening of the shooting star doesn't line up with the close of the last candle. Yes, that is correct. This isn't necessarily a common scenario that you're going to see where the open and close have such a discrepancy. This is just the example, but it shouldn't change on a real stock. It's going to look the same for the most part. It's just, not going to have this gap, but for the most part, it's going to look the exact same. It's just this example in specific has that kind of gap. The opening of the shoot. Yeah. Hopefully, does that make sense though, Zoom user? Did that kind of answer your question? It's just the example. This isn't necessarily a normal thing that you'll see, but it's just what the example. Oh no, that didn't answer your question. The open of the shooting star and the slide gaps from the previous candle's close. Oh, okay. You mean, yeah. Okay. Yeah. So why? Okay, so reasons that this might happen is, for example, this could be the 1 minute chart. And if, for example, we look at the ES 1 minute chart, there's these gaps like this that form. So when we're looking at the lower timeframes, there's these weird kind of things that we might see. But for example, when we move out to the 5 minute chart, there's none of that action, right? It looks a lot more normal. So you can see most candles open right where the previous one closes or very close to, right? So this one opened right where the previous one closed. This one opened right where the previous one closed. So there's sometimes minor discrepancies, but you have to remember that candles are always moving. So it's not always going to be they open right where the previous one closes. Does that answer your question? Kind of makes sense. Just in general, lower timeframes will have less liquidity and data, so they're going to be a little bit weirder, but they're not always perfect. They're not always going to line up exactly open and close wise. So hopefully that makes sense. And let's get into our first pop quiz question, or really second. So I'm going to want you guys to take a look at the candle and let me know what kind of candle it is and tell me if it is bullish or bearish. So let's take a look at this candle in specific. I'll be happy if you guys get the bullish or bearish right. I'm less concerned about you guys understanding if the name, because that's just memorizing. You'll be able to memorize it over time. But for the most part, I want you guys to know if this is bullish or bearish. So what do you guys think? Bullish or bearish? We got Minion saying hammer. Okay, we got a few of you guys saying bearish. Can you guys provide a reason why? Some people saying bullish, some people saying bearish. If you're bearish or bullish, please provide a reason why. Just remember, think about our context of buyers and sellers, right? What are the buyers doing in this candle? What are the sellers doing in this candle? Okay, so we got some people saying buyers are starting to come up. We got the buyers fighting back. Again, focus on this candle right here in specific. This candle right here in specific. Less about the trend, more about this specific candle. Well, the trend is important as well. Okay, so we got some mixed answers. What I was looking for here is bullish. Because if you remember, if we look back to our example, remember our hammer example, right? We're looking for a downtrend, and then when we see a candle close near its highs in this long downside wick, this indicates that there was sellers at one point in this candle, but buyers took control and closed the candle at its high, which is a strong signal showing that buyers are present in the area and willing to buy a stock at a specific time. And the reason that this might have tripped some of you guys up is the candle is a different color, right? The candle that we looked at the example is red, whereas in the example, it's green. And that's just to kind of hammer home the point that it's not always going to look exactly like the examples we reviewed, right? You can see this example, this hammer, for example, has this little wick on the upside, or this hammer, for example, was red, right? So it's not always going to be perfect, but you have to remember that this downside wick indicates that there are buyers present in this area that are beginning to take control. It's hard to see, but you can also see a little bit of an increase in volume here. So before I show you guys the result, if this is bullish or bearish, which I think we've already cleared that up, but for those of you who said bearish, do you guys understand why this is going to be a more bullish than bearish candle? Does that make sense now? It's completely fine to get it wrong. And those that do get it wrong, help everybody learn. Because I promise you, getting wrong answers is great. It's just great that you're trying and thinking about it. So don't worry if you got it wrong. But if you did it make sense? Yeah, so it ended, I would say that it ended on more of a bullish note with this long downside wick. Obviously, the trend is still down, so that's important to keep in mind. But for the most part, this is a more bullish than bearish candle because of this long downside wick. This is going to be a hammer pattern. And again, the next candle isn't always going to be green. In this case, though, we got a nice uptrend following this hammer candle. So that's just kind of an example there. Hopefully that helped a little bit. For those of you who got it wrong, is it clear why that answer wasn't bearish now? Maybe now that you can see the results a little bit. Just want to make sure, because I know there's a few that missed that one, and I want to make sure everybody's clear. I don't want to leave anybody behind. Okay. Cool. Wealth guy, you got it. I remember I saw you. You good? If everybody's okay, then I think we're going to move on to just a few more candlestick patterns before we wrap up for the evening. So just a few more. Hopefully you guys can bear with me for maybe another 10-ish minutes, and then we're gonna summarize and then wrap up for the next class. So let's talk about a few more patterns really quick. These ones are going to be a little bit simpler in my opinion. So these are essentially just going to be candlesticks to watch out for, to keep in mind, just kind of different scenarios to be exposed to. So first scenario that I'm going to show is these doji candlesticks. Essentially, these doji candlesticks indicate indecision or weakness of a trend. Can anybody make any assumptions as to why a doji candle would show indecision based on these examples? At least these ones right here. These ones show a little bit more of a decision. But why would you say that these candles show indecision? Minion says 50-50 tug of war. I like that. You're using the analogy. Nikki says even buying and selling. Buyers and sellers were the same. Nobody knew what's going on. Excellent, excellent answers. Yep, I 100% agree. Yeah, same price action, even. Yep, I 100% agree with all those answers. Absolutely. Essentially, nothing happened here. The buyers didn't win and the sellers didn't win. And there's these long upside wicks. So at one point, this was a really green candle. At another point, this was a really red candle. But ultimately, the price went nowhere. So it essentially means that buyers and sellers are an even match and price is going nowhere. And I'll show you how to make trades off of these doji style candles. You want to wait for the range that these dojis create to break. And these type of dojis show a little bit more information. So remember, these long upside wicks indicate the presence of sellers. These long downside wicks indicate the presence of buyers. So this is like a hammer style candlestick with this long downside wick. And this is like a shooting star style candlestick with this long upside wick. So again, this just shows that you can sometimes get some information out of these gravestone candles. Just to show you a quick example of how you could potentially make a trade based on these dojis, there's a bunch of these doji style candlesticks right here in this range, right? You got one here, two here, right? Where price was effectively going nowhere, which shows that buyers and sellers don't really know what they want to do, right? Price is kind of just stuck. It's not going anywhere. It's trading in a tight range. And this is on the 15-minute time frame. So price essentially was in about a 50-ish cent range for an hour and a half, right? There's really 1, 2, 3, 4, 5 15-minute candlesticks where the price really went nowhere. So a breakout of this range is going to be significant. And again, I made this call arrow. Notice how once we break below these doji's lows is when the trend starts continuing, right? So you can see we start to get a close below the range of these previous dojis. That's when we begin to drop lower. So if you are trading you see some kind of chop, right? This is just an example of trading the range, right? Either you long the extremes of the range or you wait for the range to break. And these dojis formed a nice trading range, right? Right around this, really like a 50-ish cent range. Once we broke below the range, we've got a nice drop to the downside. We see this hammer form, and that's when price began to rally, right? So this is a really nice, clean example of how candlestick patterns can give us some information. So hopefully that doji example kind of makes sense. And again, I'll stop for questions in just a little bit. We got like 2 more slides to get through. So this is kind of an interesting pattern. This is one that I consider less of a pattern and more of trend analysis, but I just want to introduce it just to kind of start warming us up to trends. So essentially, these are called falling 3 and rising 3. I've never seen anybody say these actual terms. The only reason I'm introducing this is because I like the kind of examples of understanding strength of trend, right? So you guys should all be able to identify at this point that these 2 red bars are insanely strong bearish candles, right? So we see a really strong bearish candle. Then we see 3 bullish candles, but they're really tiny, right? So they look relatively bullish, but they're not going very far, right? So you can see that price dropped very quickly in this candlestick time frame, and it couldn't even rise halfway through this previous candle within 3 times this drops time frame. So this essentially shows that sellers are very strong, buyers are slowly stepping in, or really shorts are covering some of their position, and ultimately price came lower once again. So this is just kind of the beginning steps to analyzing strength of trend. So I'm not going to focus too much on this. I just want to plant the seed in your head so you begin to think about it, kind of these concepts of using candlesticks to understand the strength of trend. I just want to show you guys just one more example. So you can see this big green candlestick indicating that bulls are present. Then you see this relatively weak pullback. It takes 4 candlesticks for price to come all the way back to the low. And then we get another big green candlestick when we get back to the lows, indicating bullish momentum. And then you can see the exact opposite, right? A gigantic red candlestick, 3 candlesticks, which take 3 times the amount of time to retrace the range. And then ultimately another big red candlestick. And I think this concept is illustrated relatively similarly on the SPY daily chart. And I just want to show you guys this example really quick, so you can see kind of how this has worked. So notice this example here. Notice how price dropped effectively $50 in really 10 days, right? And it took 50 days for price to retrace that drop. Essentially, this is a sign that sellers have been significantly stronger than buyers, right? There was this huge drop very quickly to the downside, and it took a very large amount of effort for buyers to retrace this move. Does that make sense? And again, we're not going to go too far into that. I just want to introduce kind of the concepts of what trend analysis is, kind of getting you guys to understand some of the thought process behind it. So hopefully that kind of makes sense. And again, one candle I kind of alluded to is the inside candles, which is similar to kind of the range trading that we discussed. This is the exact opposite of the engulfing candles. So essentially, the inside candles are created when there's a candle that trades fully within the previous candle's range. And there's a few ways to look at the inside candles. You can look at the high or the low of the previous candle, or sometimes you can look at the open or close of the previous candle. So essentially, the smaller the following bar, the better. Essentially, that's just showing consolidation. So that's kind of another way of thinking of indecision to an extent. But think about kind of the trend. Think about back to this example, right? It's similar conceptually to this, right? So the inside bar, we see a really strong candle in one direction, and then we see either a weaker candle in one direction or a weaker candle in the same direction, indicating that price is beginning to stall out in this area and just starting to consolidate. So essentially, we're looking for a breakout of the higher end of this inside candle or the lower end of this inside candle. And I want to just show an example that might be able to explain a bit better. So again, notice how this candle is fully within this previous candle's range, right? And if we look at what happened when it broke to the upside of this range right here, we made a move higher, right? So this inside candle was formed right here. Price broke out of this inside candle range to the upside. It came, retested it, and then we got a nice move higher. So this is essentially kind of the concept of inside candles. The reason that I like them so much is, as an options trader, when you see consolidation such as this, it's great because this makes options cheaper. If you remember back from our options basic Greeks class, when price consolidates, implied volatility decreases, which makes our option contracts cheaper. So when we see this form of tight consolidation, we're going to see that decrease in IV, which makes us happy because we get to get options contracts for a bit cheaper, which gives us better risk to reward. So again, right, this is just kind of a real example of potentially making a trade based off of this, right? You can enter on the breakout or retest of this inside day level. And this works both ways. So with that being said, I think we got one more question. I'm going to just get through this pretty briefly because I know I've kept you guys here for a little while. So again, it's going to be the same thing. We're going to talk about this candlestick pattern and see if you can call out multiple patterns. There's a few right answers. This is going to be a quick one. We're just going to see if you can call out some names of some patterns and recognize the price action. Just let me know. If you name a pattern, just let me know if that pattern is bearish or bullish. And then we're going to summarize and wrap up. So let's see what you guys think about this. Actually, I forgot about this example. I really don't like this example that much, but there's a few good things to name here at least. So take a look at this candlestick chart and see if you can name a few different patterns. Yeah, so the bearish engulfing is definitely one that I see. There's a few more that I also see though. few more that I see. Yeah, I see a little bit of a doji, right? That's a little bit large to be a doji, but conceptually, we will call that a doji, right? Just for the purposes of this lecture, right? So I agree with that. Inside candle. Yeah, that's 3 of the answers. I thought I had one more. Oh, no. I guess my main answer used to be inside candle, but other answers were doji and bearish engulfing. So all of those were correct. Essentially, what we'd be looking for here is we'd see this doji form, right? So when we see a doji form, that already is an indication to wait and see what trend does. Then we see an inside candle, which is another indication to continue waiting, right? Price hasn't made a decision yet. Then we see a bearish engulfing, fully taking out the range, the opening closing range of these previous 2 candles. That's our bearish signal, right? So that's a really nice bearish signal for us. Essentially, we see this weakening in buyers. We see this indecision. Buyers and sellers don't know what to do. And all of a sudden, buyers take control, close below the low of this range. And that's when we get a nice move to the downside. So that is a nice example of kind of waiting out that indecision. And yeah, hopefully that makes sense. I didn't see anybody get that one wrong. All answers I saw were good. So yeah, market closed on a bearish note. Yeah, I agree. So just a few final remarks to potentially aid you guys in reviewing charts in the future. There's a few cheat sheets that you can refer to that kind of help you understand some patterns. You'll see, if you can see this cheat sheet on mobile, on this cheat sheet and on the next one, there's a bunch of patterns that we didn't talk about tonight. Personally, I don't think it's relevant to know and memorize each and every pattern. But if you want to have this kind of reference while you're analyzing charts, go ahead and have it. I will post this with the PowerPoint when the lecture goes up. So this should be up by tomorrow, I believe, is when we're going to try and have it up. So yeah, to answer your question, Kermit, this lecture should be posted by tomorrow. But essentially, these candlesticks can help you as you're looking through charts and just trying to analyze things. But really, I think the most fundamental thing to take from this lecture is what we discussed at the beginning when we talked about just understanding the difference between a strong bullish candlestick, a weak bullish candlestick, a strong bearish candlestick, and a weak bearish candlestick, and just understanding what the wicks mean and the bodies mean. That is what I would most be satisfied if you guys came out of this lecture understanding. I don't think it's as important to memorize these patterns, because if you understand what the patterns mean, you don't need to memorize the names and what they look like, because you'll look at the patterns and you'll know what you're seeing just based on your deeper level knowledge of what's actually going on. So that's just one thing that I wanted to highlight. With that being said, let's do a quick summary and talk about the next class. So today we talked about bullish and bearish candlesticks. We talked about reversal and other types of candlesticks. And we also talked about a few ways to turn this into a trade plan. And again, we're going to continue to give these examples on how to potentially make trades off of them. We're going to go into much more detail later in the course series on in detail making trade plans. But I'm trying to give you guys little bits and pieces of things that we're going to talk about in the future to get you thinking about it. So just some things to be thinking about that we talked about tonight are trends, trading plans, support and resistance. So the next class, we're going to discuss support and resistance. So that should be a really fun one. We'll also talk about supply and demand. But yeah, so that'll be next Monday, same time, same place. With that being said, I know somebody wanted me to check out SMCI. I don't know. Let me see if they're still in here. So I'm going to check out that SMCI really quick, and then we're going to head out. But yeah, that's the end of the content for tonight. From here, I hope to see you guys all in the next lecture. Again, it's going to be Monday next week for me. I hope you guys all enjoyed. If you guys have any suggestions or feedback from this lecture, please deliver that to me in the Discord. I would really love to hear you guys' feedback. As always, I want to make these classes as good as possible for those of you who dedicate your valuable time to spending with me an hour every week. So if I can make your time any more valuable, please let me know how to do that. I never want to waste anybody's time. I never want to mislead people. I always want to make sure you guys are feeling like you got something of value during this session. So if there's any suggestions you have in the future, any way that I can cater better to your learning style, or ways that I can make things more accessible for you, just please do not hesitate to let me know so I can help you out as much as possible and make this time as valuable as I possibly can, as well as your membership here with us, because we truly value that. And without you guys, I mean, the server is nothing. So again, we're going to continue to work as hard as we can for you all. So please, we can improve if you guys don't give us feedback. Obviously, we can do our best, but give us that feedback. We're going to work on implementing it as much as possible. And yeah, so again, always a pleasure. Hope you guys have a great rest of your night and week, and I'll be always around in the Discord server to answer your questions and DMs, as well as the rest of our staff team. I actually haven't been answering DMs recently. I need to get back to it. I've been kind of slacking. So I will admit, if you haven't gotten a response from me in like 2 or 3 days, I need to get back to it. So, hey, Lambos is in here. Thanks for being here, Lambos. And yeah, hope you guys enjoyed. Again, I'm going to just take a look at SMCI because iPhone has been really excited about it. So I'm going to make sure I take a look at that for them, and then I'm going to call it after that. So SMCI, super micro computer. I've never heard of this before. I mean, it's definitely on a rip. This is what brought your eye to this one, iPhone? What even is this company? Super micro computer. I've never seen this before in my life. Interesting. I mean, it looks pretty solid. I'll give that to you. Just broke this little trend on the daily. Check it out, YouTube. You'll have to send me some links. Maybe I will. Whoa, that trend line definitely did not stay how I wanted it to there. Yeah, this looks definitely interesting. I'd have to figure out what this stock actually is, but I mean, it seems like they're doing incredibly well with, I mean, their earnings per share are doubling every report for the most part. That's pretty shocking. And yeah, this is an interesting name. I have never seen this before. How long have they been around? Oh, for a long time. They aren't new. Is this like a semiconductor stock or something? Yeah, wow. I've never seen this before. I don't think this rally will be sustainable in the long term, it doesn't look like, but in the short term, I mean, there's no, AI. Oh, interesting. Yeah, I mean, I think eventually this rally will see an end, but I mean, for now, there's no reason to fight the momentum. It clearly wants to move higher. I mean, it just broke this trend. Looks like it also is just trading right at that key level. I mean, if I was trading this and I knew more about it, I'd probably want to be long above 90, but this has definitely gone really far, really quick. But I mean, it looks not bad. Super micro. Seems like, do you guys all know about this? I've never seen this name before. It's like a new thing, new stock. Yeah, I'll have to look into it more. But iPhone, I don't know your Discord name, but if you want, you can feel free to send me some messages, and maybe I'll look into it a little bit further and learn more about this name. Because oh, you don't know, just Google it. Okay, you're making me go crazy, Wolf guy. I was like, I never heard of this before. Oh, you've been on it for a year, iPhone. Damn. Well, you've been printing then. This should. Excuse me. This thing's up big. All right. Well, hey, yeah. Send me a DM, and maybe we can talk more about it. But I mean, it definitely doesn't look very bearish in the short term. I'll give that to you. But this is a rally. I mean, this is a pretty good example of a parabolic move, which almost never hold in the long term. But in the short term, I mean, you can't fight it. Kind of reminds me of Moderna. We'll take a look at that weekly chart. Looks like this to me. mRNA. I'm sure it'll have a similar fate eventually, but for now, I mean, I don't want to fight that. No way. But it doesn't look bad. But yeah, I think from here, guys, I'm going to call it. But I hope you guys enjoyed the lecture for tonight. Hope to see you guys all next week. And if you have any feedback, comments, questions, concerns for the next one, please drop that in the chat or let me know in the Discord so I can follow up with that. So again, always a pleasure being here with you all. And I hope you guys have a great rest of your night and your week. And can't wait to come back with you all next week. See you, everybody. Thank you again.